Welcome. Today is Friday, December 9th, 2022, and we are going to be looking at two charts today. Very simple, very easy. We're going to keep this simple to the point, and we're going to do it as simple as possible. That's the best way to it's the best way to describe it. So, what are we looking at today? We're going to be looking at Docu and we're going to be looking at Tesla. Let's look at Tesla first because it's on the left hand side and I usually read from left to right. So let's just take a look at it and let's dive into it. Let's see how well you would have done if you would have traded Tesla today. Now, Tesla starts off very, very bullish. You would only have to, today's day would have been simple and easy. You could have traded it in the morning. You could have stayed in until about 11 o'clock and you would have been fine. Literally 10 minutes of work or less. So let's look at this right here. If we enter into a call and just hold on to it and exit over here, that would have been fine for the day. Let's actually draw some trend lines over here. Touches this, touches that, touches this level. Let's just draw, hold on. Let's see this right here. Right here would have been a good point to exit since it touches this area once, twice, 3 times, breaks through. Right here would have been fine, although here would have been fine as well because it's about the same. You would have just had to wait a little bit longer. Now, as we can see, creates the support and resistance levels over here. So there's one. Let's bring in another one of these, and it's about just around there. Bounces off that level, goes up midway, bounces up, goes here, breaks. Ideally, it would have been good to trade over here, but this would have been another confirmation. This indicator is a better teacher as to when you should enter a trade. Goes over here, and you can leave at any time. You would have been profitable right there. Re-entry over here, and close out when you feel appropriate. That would have another sell for the day, and that would have been pretty much it. Very simple, very easy to read. If we zoom in, as soon as it breaks our line over here, would have been a perfect entry point right around here. There would be moments of uncertainty right around here. So many people might have closed out around here as well because it seems like it goes down and then it comes back up, but that's one thing in trading psychology that you have to develop: how to stay in trades, how to become comfortable when the trade reaches break even, and then either you have to make that decision right then and there based off of the previous data on the chart, whether to stay in that trade or whether to leave that trade. Take for example over here is an entry point, and you could exit over here, break even, or as soon as you see the market coming down, you could have exited the trade over here. You would have been fine. This would have been a profitable trade. And as we can see, the most money would have been made in the beginning of the day. Now, just from the looks of it, as we can see, the market goes down over here, and it seems like a lot of people would want to make the most of their trade. So the moment they notice it going down, would have probably left around here. However, for those with the contentment and the peace, the inner peace to hold on to a trade, and who are comfortable with it going to almost the break-even point without closing it, and if you stayed in, you would have made twice as much. So keep that in mind. Now, it's okay if you don't. It's fine if you don't. A lot of people just increase their position size, but this is a skill set and it takes time to learn, and it takes time to develop that sense of peace when it comes to staying in a trade. Now, one way to develop that piece is to not only rely on trading as your main stream of income. If you rely only on trading for your main stream of income, you might be desperate for the money, and that might cause you to mess up in other ways. So having another stream might be a good idea. So that's Tesla. Now let's get into DocuSign. I'm just going to move this chart over here, and we can zoom in a little bit. As we can see, I have another indicator opened up on DocuSign. Very simple, even simpler and easier to read than Tesla. As we can see over here, DocuSign breaking. Ideally, this would have been a good entry point, although you could have entered right over here, which many people may have. I would have probably entered over here, held on to the trade, might have exited around here. Either way, could have made the most if you exited around 51.30, and the market drops back down, closing out of the trade. Possible puts. Turns out no. Get into another call, hold on to it for a while, and as soon as you realize that it breaks this level over here, it's a good time to sell. So right around here is a good sell point, closing out of that trade in profit, and possibly get into a put, closing out, maybe a break even or a small or a small loss, and getting into it again, breaking even. So most of the money, similar to Tesla, would have been made in the beginning half of the day before 11 o'clock a.m. So with that being said, that was it for the day. DocuSign and Tesla. Both of these charts you would have made the most before 11 a.m. That means working from 9:30 to 11, which is not that long, and making more than most people would make at a regular 9 to 5 job. So if you'd like to learn more about this skill set, visit our website, awakeglobalcapital.com. Send us an email, send us a message on Instagram, and we'll get back to you as soon as possible.